afternoon, everybody. It is Steve Lookner with Agenda Free TV. We are here to bring you live coverage of the Fed interest rates decision. They are going to be announced their decision on interest rates in 54 minutes and 55 seconds. It is widely anticipated that they will announce another quarter point rate cut, but there's also this question of what will they signal about the future, about rate cuts in the future, about next year. So we are going to bring you live coverage of this, going to be taking your comments on the air. And after they announce their decision, then Jerome Powell of the Fed will give a press conference. So we'll have live coverage of the Jerome Powell press conference coming up for you. We'll be showing you that as well. And we're going to be taking your comments and questions on the air. Give me a shout at Lookner on X if you'd like. I'll be taking your comments from the chat rooms as well. And I also want to thank our moderators who are here. We have Janet B. and Beth Mythical. Thanks so much for being here. Leslie Ladyhawk over there on YouTube. Thank you so much. We have on Twitch moderating right now. Give me a moment. Matthew Kohai 3 and Surly Dev, thanks. Linda Belk, Larry, and Misha on X. Margaret Riley, K. Larry Body over on Facebook. Thanks so much for moderating there. Shannon Davis Hughes as well. You can see this headline right here from Reuters. Fed expected to lower rates but may signal a coming pause. The major betting markets I've looked at strongly think that there will be a quarter point rate cut. That seems to be the consensus. There could be no cut. There could be a bigger cut, but it's widely believed there'll be a quarter point rate cut. But also, again, question about what they're going to signal for next year. Let's see what you guys think. Let's see. I want to read... KNVKL says it's like the ancient oracle. So Jerome Powell, he's going to be replaced. His term ends as the Fed chair. Is it May? Yeah, May 15th of 2026. So President Trump has been talking about replacing him for months now, but it doesn't look like he's going to try to attempt to replace him before his term ends as chair. May 15th, 2026. Let's see here. Maybe we'll do a poll and see what you guys think. Selvo Nave says, I hope we get another quarter point cut. We need it. So the Fed, I believe it's two main goals, because I remember Jerome Powell talking about this last time. But two things it pursues are they want to keep employment up. You know, they want people to get jobs, but they also don't want there to be too much inflation. So those are the two main goals they have, as I understand it. High employment, low inflation. But there's this question now, what is the biggest risk? Is the biggest risk of inflation going up or unemployment going up, of the job market going down? So in theory, lowering interest rates in theory, will help the unemployment number, but also possibly make inflation go up. So there might be people on the FOMC, the committee that decides on the rates, which is the Federal Open Market Committee. There might be people who say, whoa, we shouldn't lower the rate because that could cause inflation. And right now, inflation is above the target of the Fed, which is 2%. It's above that. So So a big question today is also going to be, how much disagreement is there going to be on the 12-person Federal Open Market Committee? Also, I don't know, there might be other Fed members who actually weigh in as well. But usually there's not much disagreement among the people voting, but it's thought that it's possible today we might get more disagreement than there's been in decades on one of these votes. So that'll be interesting to see. So we'll have to let you know about that. I'm gonna give you some background here. Let me show you this here. Fed expected to lower rates, but may signal a coming pause. Our viewer Lidio Bojka said a half-point cut would be surprising. Jonathan Bushby says, how can the Fed make a decision when President Trump is hiding all the data? So because of the shutdown, there wasn't a bunch of data that there would have been. That's another issue here, is trying to the Fed trying to make this determination of what to do without all the data they would normally have. All right, let me show you this here. The U.S. Federal Reserve is expected to cut interest rates today as policymakers grapple with gaps in economic data caused by the recent government shutdown, which we were just talking about, and work through competing views about the risks facing the economy. The anticipated quarter percentage point cut may well come with a non-committal or even hawkish approach to next year's rate path, given the division among policymakers between those skeptical about the need for more rate reductions in the face of still elevated inflation, and those who feel the economy and job market may weaken if the U.S. central bank doesn't bring down borrowing costs. So those are those tensions. Lower rates, in theory, helps the economy, helps the job market, but can lead to inflation. Higher rates can help control inflation, but can tame the economy and maybe raise unemployment. So there are your tensions. And a big part of what people are looking for is not just do they lower the rate, because it's pretty widely assumed they will. What are they saying about their feeling on future rate cuts? New quarterly economic projections to be released alongside the latest rate decision. So they will have this for you. They will also be releasing their estimated economic projections for coming quarters, I believe. New quarterly economic projections to be released alongside the rate decision will show how Fed officials expect the economy to evolve next year, along with what they see as the appropriate path of rates. Those year-ahead forecasts, however, often become outdated quickly due to incoming data and say little about the pace of expected policy actions. So they can say what they think is going to happen, but that definitely can change depending on new data. Also, they say the economic projections that are going to be released this week have a particularly short shelf life. Within days of the Fed's meeting, U.S. statistical agencies will release a large, tranche of data delayed by the 43-day shutdown, including job and inflation reports for November that could help resolve the core debate among central bankers. Another reason for the rate-setting Federal Open Market Committee to be circumspect even as it moves to lower its policy rate to the 3.5% to 3.75% range. So they're saying that a bunch of data is supposed to come out several days after this. So that could impact how the Fed is thinking for the future. Analysts with TD Securities wrote, "We expect the FOMC to deliver a 25 basis point cut this week, quarter point, with decidedly more hawkish guidance." Hawkish, which as I understand it means they're going to say that they're not going to say, oh, we're anticipating a lot more rate cuts anytime soon. The decision will likely be equally or more contentious than October's. The last top line data the Fed received on, what did I say before? Its two main areas of concern, inflation and jobs. The last top line data they got on that was in September, when the unemployment rate rose slightly to 4.4%, and the central bank's preferred measure of inflation was at 2.8% versus its 2% target. A fresh government report on Wednesday showed U.S. labor costs increased 0.8% in the third quarter, slightly less than expected, and boding well for the outlook of the services inflation. Okay, I want to take some comments from you guys. This expert, Carl Weinberg, chief economist at High Frequently Economics, told Reuters, there is no convincing argument for a rate cut. But also seemed to say that there's nothing to worry about with inflation, so no argument for it. The implication here is that there's no argument, no big argument, convincing argument for raising rates. It seems to me like this expert thinks that rates should just be the same. Oh, this is the thing about the dissents. Let me just mention this too. Possibility of more dissents. So this is an important aspect of the decision today, is how many people dissent from whatever the majority says. The October 29th decision to cut the policy rate to the current 3.75 to 4 range produced dissents in favor of both tighter and looser monetary policy, a rarity that reflected the risk of persistent inflation that some of the Fed's regional bank presidents have cited as their paramount concern, and the possibility of a fading job market that some members of the central bank's board of governors have put at the center of their approach to monetary policy. Fed Governor Stephen Miran, who was appointed by Trump, I believe, on leave from his job as an economic advisor in the White House, has dissented at each of the two meetings he has attended in favor of a larger half-point percentage cut. President Trump wants lower rates, and he may well do so again. Several Fed regional bank presidents have publicly opposed further cuts, with possible dissents from one or more of them expected as well. The rate decision, the projections for the economy, and a new policy statement will all be released in 42 minutes and 32 seconds. And then Jerome Powell, the Fed chair, will have a press conference which we'll cover live. Wow. All right, what do you guys think about this? What do you think? 42 minutes. Our viewer Carson the Scientist says lower the rates. President Trump has made no secret of the fact that he thinks rates should be lowered. Fantasy says stocks are flat right now. I saw this earlier. Wall Street mixed ahead of Fed verdict as doubts grow over 2026 cuts, says Reuters. And then also I saw this. This is from AP. Look at this. Wall Street is quiet as it waits for the Fed's announcement in the afternoon. The U.S. stock market remains largely quiet today as Wall Street waits to hear what the Federal Reserve will say in the afternoon about where interest rates may be heading. The important question for Wall Street is what what Fed officials will say today about where they see interest rates potentially heading in 2026. Wall Street has been bracing for Fed officials to imply fewer cuts to rates in 2026 than this year, and potentially fewer than the 2 next year that many traders are expecting now, even after they downgraded their forecasts. While lower interest rates can boost the economy and send prices for investments higher, they can also worsen inflation. With inflation remaining stubbornly above the Fed's 2% target, Fed officials are notably split about whether high inflation or the slowing job market is the bigger threat to the economy. Interesting. Let me take some more comments from you guys. Hold on a second here. And then AP also says Federal Reserve likely to cut rates, may signal just one more reduction next year. D's N says, I think there will be more than 2 rate cuts next year. Once Trump gets a loyalist in as chair, all bets are off. Interesting. Dockport says the market already made their moves. Even I did. One moment here. Holly Earth says, I predict a hawkish quarter point cut. I think that's the general sentiment, but we'll have to see. Fantasy says stocks are flat right now. Little summary here. The Dow is up about 0.5%. NASDAQ is down about 0.25%. Russell 2000 up about 0.33%. S&P 500 about even. Good Gundru says 25 basis points, no cap for real, for real. Just 38 minutes, oh my gosh, until the announcement, and we'll get a bunch of stuff to look at 2 p.m., and then we're going to have the Jerome Powell press conference coming up at 2:30. We will have that live for you. Hey, thanks to Firestar, though. Firestar, thus, says lower interest rates equals higher prices for us all. Thanks for your support, Firestar. Though. Thanks for our member, Northwoods Wonderland. Thanks, Angelina Knox, for being a member. Thanks, Ninu, for your support. Let me shout out our moderators as well. We have moderating Kay Lowry Body over there on Facebook, and Paul Anderson, Shannon Davis Hughes. I think Margaret Riley is over there too. Hey, thanks Christy Claft for being a subscriber over there on Facebook. Thank you. And also thanks to Linda Belk, Larry, and Misha on X. Our viewer on Facebook says, Paula Thompson says, I really miss the days when my husband took care of all the big money stuff and I didn't have to think about it. Thank you for watching, Paula. Also, thanks to our YouTube moderators like Beth Mythical, Janet B., Roberts May Queen, Ruth, Leslie Ladyhawk, and all of our other YouTube moderators. Really appreciate it. And our Twitch moderators. We're going to do a poll in a second. Our Twitch moderators, Matthew Kohai 3, Surly Dev. I got that fired, the Bears. Thank you. Hey, let's do a poll. So the poll's going to be this. Apologies to Facebook because they still haven't fixed their polls. I wish they would. Let's do a quick poll here. The poll will be, what will the Fed do? And it's going to be, I'm going to give 3 choices. No change, lower by quarter point, lower by half point. That's what I'm going to give the 3 choices there. Oh my gosh, that's supposed to be off. That's supposed to be off. Normally I turn my ringer off, but I forgot to. Okay, what will Fed do with interest rates today? No change. Lower by 0.25%. Lower by 0.5%. Here we go. I am posting the poll right now in YouTube, and I'm going to post it on Twitch right now. No change, lower by 0.25%, lower by 0.5%. Okay. Let's see, what did our viewers say? What did our viewers say? Here is the results of the poll. Now, the betting markets I've seen, it's like 97% or so. Before I came on the air, I checked for a 1/4 point rate cut. Okay, so over on YouTube, 60% say lower by a 1/4 point. 16% say lower by a 1/2 point, and 24% say no change. How about on Twitch? 58% say lower by a 1/4 point. 29% on Twitch say no change. President Trump would not be happy with that. Lower by a 0.5%, 21% on Twitch. We have some disagreement in our chat rooms. We have some dissent in our chat rooms. Give me one moment here. Okay. Sick of fake news says it's like over 90% chance of cut, so do people not watch news? So sick of fake news, you don't think people can disagree with what is, like, for example, the betting markets are saying? I mean, I agree. I would say the general consensus is certainly that it's going to be a 1/4 point, but we don't know. Thanks for voting in our poll. Richard TN says we make the news. Fake Sausage says print the cash we don't have. SRAX says he either lowers or Trump is firing him. Well, it's a vote of 12 people. 12 people are on the committee. But our viewer SRAX thinks that if they don't lower today, that Trump would try to fire Powell before his term ends in May. I think it's unclear legally whether he could actually do that. Atheon Voids thinks anything less than a 1/4 point would crash markets. Winter says, I have no clue what's going to happen. Larry Martinez says, something tells me they're going to aim high on this. JB thinks the no change crew is delusional. ZZ Cha thinks the major betting markets are wrong and that there's going to be no cut. Susan Priest Buchner thinks there's going to be a 0.5% cut. Juliana Martin says lower by 0.5 point is my guess, just to test the waters going into January. All right, so hey, we only have about 30 minutes and 30 seconds until we get the Fed decision. And we're going to get the Fed decision. We're going to hear about how many dissents there were. We're going to get their economic projections. We're going to get the new Fed statement. And then a half an hour after that at 2:30, we're going to have live Jerome Powell of the Fed press conference about the decision. So looking forward to bringing that to you and going to be taking your comments and questions on the air. I appreciate you joining us. And let me show you something else here. Here's something from AP yesterday, just to give you some more background here. So again, remember that the Fed sees its two big goals. And this is something that last time we were covering this, I remember Jerome Powell saying. The two big goals are they want to lower unemployment and raise employment. So keep employment high, but also keep inflation low. So if you lower rates, that in theory is going to help the economy and also help keep employment up, give more people jobs ultimately. But lowering the rates is likely to raise inflation. If on the other hand, you raise the interest rates, well, that can help control inflation and help inflation go down. But it can also hurt the economy and create higher unemployment. So at the Fed, they're trying to figure out like, well, what's the most at risk? What's the biggest thing we have to worry about right now? And the problem recently is there's this debate in the Fed. Well, what should we be more worried about? Should we be more worried about the inflation or the job market? And there's dissent in the Fed about what they should do. So that's something to keep in mind. You'll be hearing that from the Fed, and I'm sure Jerome Powell will talk about it in his press conference. Those competing interests. Ruth says, I believe they will lower the rates. Let me show you a little, Fantasy says you could call it dual mandates. Okay, let's talk about a little more background here. A little more background coming up as we wait 27 and a half minutes until the decision and then the press conference. All right, let me show you this. Where was I here? What was I just going to show you? Just going to show you something. Here. This is from AP. The Federal Reserve faces an unusually contentious meeting this week that will test Chair Jerome Powell's ability to corral the necessary support from his fellow policymakers for a third straight interest rate cut. The Fed's Now, I guess there's a 19-member committee, but 12 of them vote on the rate cut, I believe it is. Oh, by the way, a quick thank you to Kristen Gates. Thanks so much, Kristen Gates, for your support. I really appreciate that. The Fed's 19-member rate-setting committee is sharply divided over whether to lower borrowing costs again. The divisions have been made worse, exacerbated by the convoluted nature of the economy. Inflation remains elevated, which would typically lead the Fed to keep its key rate unchanged. But also hiring is weak and the unemployment rate has risen, which often lead to rate cuts. Again, if you cut the rates, that in theory can help lower unemployment, but it runs the risk of increasing inflation. Some economists expect that 3 Fed officials could vote against the quarter-point cut that Powell is likely to support today, which would be the most dissenting votes in 6 years. But I think if 4, I believe I read an article last night that said the last time there were 4 dissenting votes was like, I want to say in the 1990s. So I should look that up and see if I can find that. Hold on a second here. Can I find it? Yes. Yeah. If 4 people on the committee, from what I understand, If 4 vote against the rate cut, that would be the most dissent since 1992. I read a couple articles that said that. So that's something to keep in mind, is how many people dissent. But if 3 Fed officials vote against it, that's the most dissenting votes in 6 years. Just 12 of the 19 members vote on rate decisions. Several of the non-voting officials have also said they oppose another rate cut. Expert William Economist, a Yale economist, said, it's just a really tricky time. Perfectly sensible people can reach different answers, and the committee kind of likes to work by consensus, but this is a situation where that consensus is hard to reach. The debate, which has been fueled by a lack of official federal data on employment and inflation during the government shutdown, could be a preview of where the Fed is headed. After Powell's term as chair ends in May, his successor will be appointed by President Trump and is widely expected to be Kevin Hassett, the top White House economic advisor. Hassett may push for faster cuts than other officials would be willing to support. Give me one moment here. Our viewer Native says they need to stimulate the economy. Oh, this expert, the Yale economist they talked to at AP, said the potential for greater disagreement could be seen as a sign of healthy debate between different views. The Fed's tradition of reaching unanimous or nearly unanimous decisions has often been criticized as evidence of groupthink. Yet some Fed officials warn that there are downsides to sharp splits. If the committee votes end up as 8-4 or even 7-5, then financial markets could lose confidence in where the central bank is headed next. For now, most economists expect today what is called a hawkish cut. The Fed will reduce rates, again, the expectations by a quarter point, while also signaling that it may stand pat for some time to assess the economy's health. Hawks refer to those officials who generally support higher rates to combat inflation, while doves more often support lower rates to boost hiring. All right, so let me read some more comments from you guys. About 21 minutes here. The Knight's Palace says he better cut the dang rate. I guess talking about the committee. Trump Steingate says, Trump said we are booming and everything is cheaper and pay is up. No need to cut the rate if we are doing so good. Supersound says stimulate economy equals inflation. Rich says, has the Fed become as politicized as the Justice Department? It's an interesting question. President Trump, what was it, several months ago, appointed a new Fed member. I'm trying to think, what's the Fed governor, is it? Fed Board of Governors member, Stephen Miran, and he keeps pushing for a half-point cut. So let me show you this here. Fed Governor Stephen Miran, who was hurriedly appointed to the Fed's board by Trump in September, will likely dissent for a third straight meeting in favor of a larger half-point reduction in the Fed's key rate. So that person that President Trump, appointed in September, has twice in the meetings called for a half-point reduction and is expected to do so again today. Now, that could raise questions as to whether, is President Trump just picking people who are just going to, no matter what, push for lower rates? I leave that to you to decide. The Fed is required by Congress, this is interesting, the Fed is required by Congress to seek low inflation and maximum employment. Well, there you go. They're the two goals. Low inflation and maximum employment, two goals that are potentially in conflict. For now, Powell and many other Fed officials are more concerned about hiring and unemployment rather than inflation. While the official government jobs reports have been delayed, in September the unemployment rates ticked up to 4.4%, the third straight increase and the highest in 4 years. Payroll provider ADP, meanwhile, reported that in November its data showed companies shed 32,000 jobs, and many large firms have announced sweeping layoffs. Worries that the job market could get worse are a key reason a rate cut today is likely, but not necessarily beyond that. Fed officials will have up to 3 months of backlogged jobs and inflation data to consider when they meet in late January, the next meeting. Those figures could show that inflation remains stubbornly high or that hiring has rebounded, which could suggest further cuts aren't needed. Interesting. So keep that in mind about the Fed. The two goals are full employment, low unemployment, and low inflation. Our viewer, Noah Romero, says, we dumping or pumping? Clinky Dagger says, is the current unemployment due to high interest rates, though? I'm not an economist. I don't have a ready answer for you. But the thinking is that changing the interest rates could impact the employment. You lower them, in theory, that helps the economy. In theory. Jason Tom Statter says, likely a quarter-point cut, then a threat to pause. Douthis says, if only the current administration wasn't busy trying to keep those reports from coming out. Douthis thinks the administration is keeping reports from coming out. Devil Doc says, so the question is, what do people more care about, jobs or inflation? Only 16 minutes. So when this comes out, we'll get the decision, but we'll also get, there'll be a lot to look into. They'll post the decision, but they'll post the number of dissents, how people voted. They'll post the economic projections. There should be a statement from the Fed that comes out at 2 as well. I'll have to pull up the page where they post all this stuff. Hang on a second here. I think it's this page. Meeting calendar, statements, and minutes. Yeah, December 9th, 10th. So something should get posted there. Our viewer By the Bar Talk thinks that lowering interest rates will only help the rich. This country is never getting better. Reverser or something like that says, if the president can't fire Powell, what branch of government does the Fed Reserve fall under? The idea, I believe, of having the Fed chair not be fireable without certain cause by a president is that the idea would be that the Fed is insulated from politics because in theory, the argument would go, if I get this right, that the Fed's goals, the Fed sometimes to keep maximum employment or keep inflation down might have to do things that are politically unpopular. Now, there's been this, I don't necessarily want to get into this all now, but the Supreme Court, I believe right now, is dealing with this issue about whether the president can fire certain federal officials without cause, and whether certain federal officials are immune from being fired by the Fed. I believe Congress has created some positions that they say the president shouldn't be able to fire, but there's the question about whether that's constitutional. That's a whole other debate, which is interesting. But there's also this thought that the Supreme Court might treat the Fed differently than some other federal officials. Let's see here. Anyways, it's a whole very interesting debate, which I did not prepare to talk about, and it's very interesting. But I don't want to get into that too much right now, because that might take us further afield, but it's an interesting question. Maybe I can say something real quick about it. I don't know if I can. I'm not going to get into it right now, or maybe after the announcement we can talk about it. Maybe we can talk about that later. Yeah, I think so. That's going to be, I think, a bit too big of a digression right now. But it's a whole interesting question. Oh, look. So just to be clear, this is what I'm talking about. This whole question. This is an AP article from a couple days ago. Supreme Court seems likely to back Trump's power to fire independent agency board members. The Supreme Court on Monday seemed likely to expand presidential control over independent federal agencies, signaling support for President Trump's firing of board members. The court's conservative majority suggested it would overturn a unanimous 90-year-old decision that has limited when presidents can fire agencies' board members, in part to try to ensure decision-making free of political influence. That's why you'd have the board member not be fireable, or leave it with only its shell intact. But there's this question of whether that ruling would apply to the Federal Reserve. Okay. Anyways, all right. Let's get back though. We gotta come back. We only have 11 minutes, guys. 11 minutes until the Fed decision, and then Jerome Powell will be doing a press conference, which we're going to have live for you. So let's kind of get centered here on what is coming up. So again, basic summary, the Fed periodically meets to decide what to do about interest rates. And their two goals, the Fed, are to keep inflation low, but to keep employment high. So the question is, if you lower interest rates, that's likely to keep employment high, but it could raise inflation. If you raise interest rates, that can lower inflation, but it can also lower employment, can hurt the economy, so and raise unemployment. So what do they think is more important? What most needs to be addressed the employment situation or the inflation situation. It is widely believed that they're going to make a 1/4 point rate cut today. That's widely believed. But even if that happens, it's going to be a question of what do they signal about what they're going to do next year. They're going to put out some guidance about what they're going to do next year. Also, how much dissent is there going to be? Of the 12 voting members, how many will vote against whatever decision they go with? That's a big question. So we're going to be hearing about that. We're going to be getting their economic projections, and Jerome Powell will be speaking at 2:30 Eastern Time. We'll be carrying that live for you. President Trump wants rates to be lower. He's been very consistent about that. But let's see what happens. We're taking your comments on the air. We're bringing you live coverage. Our viewer Libertas thinks it's going to be a hawkish cut, which would be a cut accompanied by them saying that they're not planning on lowering rates much in the year to come. Oh, I just, hold on a second. I saw one of our viewers mention something. Hang on a moment here. What is this report? Bloomberg is reporting that U.S. forces have intercepted and seized a sanctioned oil tanker off the coast of Venezuela. They say Faytux News posted about this. So Bloomberg is reporting, by the way. Hang on. I'm going to tell you what they're saying. So we have that news breaking as well. Bloomberg reports that U.S. forces have intercepted and seized a sanctioned oil tanker off the coast of Venezuela. And Bloomberg says this is a serious escalation of tensions between the two countries. The seizure might make it harder for Venezuela to export its oil because other shippers would be more reluctant to load its cargoes. Also, they say most Venezuelan oil goes to China. All right, so we'll keep an eye on that. That's just being reported by Bloomberg. Again, Bloomberg reports that U.S. forces have intercepted and seized a sanctioned oil tanker off the coast of Venezuela. All right. Anyways, we'll talk more about that. We'll talk more about that. But Bloomberg is reporting that now. We'll have time to talk about that. We have 6 minutes and 45 seconds until the interest rate decision. Thanks to the chat for mentioning the Venezuela story, and we'll certainly have some more updates on that. Hey, thanks to Ship Clock 5 for your support. Thanks, Ship Clock 5. I appreciate that. Also, Gary Baines for the memberships. Daniel Israel for the membership. Thank you. Also, thanks for being a member. Damon Melody says, how does this impact me? Well, again, rates going down or up can impact inflation. It can impact how the economy is doing. It can impact employment. So all of that can affect you economically. But, for example, if they cut rates, which they're expected to do, in theory, that can push inflation up. So that's one way in which it could impact you. But maybe it helps employment and the economy, and that helps you in some other way. Even if it's not you getting a job, maybe a better economy helps you another. Maybe it helps your business or something. All right. So about 5 minutes, 5 minutes, and to repeat, after all this information comes in, we're going to have at 2:30 p.m. the Jerome Powell press conference. We will be bringing it to you live, and we're also keeping an eye on this Bloomberg report that U.S. forces have intercepted and seized a sanctioned oil tanker off the coast of Venezuela, what Bloomberg calls a move that is a serious escalation of tensions between the two countries. Our viewer Oregon guy thinks employment by small employers seems to be weakening and will continue to be weak until next year. Therefore, our viewer Oregon guy says, I think rates will be adjusted lower today. Sparkplug, our viewer, says employment is already cooked. They're going to make it worse. All right, 4 minutes and 20 seconds. I wasn't, I just said that randomly. People are going to say, oh, you intentionally said 4:20. No, I didn't. I honestly just read it, but it worked out that way. 4 minutes and 6 seconds now until the announcement. It is widely expected that it'll be a 1/4 point rate cut. So that'd be a big surprise if it weren't. But what will the projection be for next year? How many people will dissent from this decision? What will Jerome Powell have to say? It might take me a second when we get the data in. Can be a little confusing for me to go through all the data. So maybe you guys can help me. Strong Coffee, please, says it's better than 4:20 is better than 6.7. Thanks, P.A. Jeepert, for your support. Just Me says, I say they will cut, and here is why. Small business owner can't afford to hire because if you do, bills won't get paid. Evan B. Daniels says low rates can also create bubbles that are painful when popped. You're saying it can cause, say, the stock market to bubble, perhaps, or something like that, Evan? 2 minutes and 45 seconds until this announcement's supposed to come out. Now, again, I believe it's going to be on this page. I think this is it. Let me check I have some other pages here too. No, that's the one. That is the one. I'm also going to get ready to show the press conference. The press conference is coming up. I can see it here, but it doesn't start until 2:30. 2:30 p.m. I should show you on the screen what it looks like, though. One moment here. I'm going to show you. Where is it? 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 Here. Look. See? Look at this. Not there. Right here. FOMC press conference, 2:30 p.m. Eastern time. So we're on it. We're on it. Oopsie. Okay, so what we need to do now is, guys, we're just about there. A minute and 30 seconds, supposedly, until this comes out. I think it's going to be posted here. One of our viewers thinks that there's an imminent attack on Venezuela. There is, thank you, Ago D2B. You don't provide any sources for that. People have been saying imminent attacks for weeks now, so I would need some reliable sourcing to think that's true. But I really appreciate that, Ago D2BD. Thanks so much for your support of the channel. I really appreciate it. Less than a minute. 50 seconds. Supposedly. If anyone is aware of some other page this is going to be released on, again, this is my belief that we're going to see it on this page. Thanks, Lola Page. I don't know why that's I don't know where there's Lola Page. They must have a source, though, what you're saying. So I don't know where they're getting this from. Again, people have been telling me attacks are imminent for weeks now. 18 seconds. 17. See, thanks for being a member, Lola. All right, about 10 seconds until this is supposed to be released, guys. About 10 seconds here. I'm going to have to turn off the clock. 5, 3, 2, 1. Okay, if I hit refresh, is it going to be here? It's there. It's there. Look, it's there. All right, what am I looking at here? What does it say? Economic blah, 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 blah. Lower the target rates by quarter point. Breaking news, quarter point rate lower. Quarter point rate lower. That's the first thing I see. Quarter point rate lower. That's what was expected. But let's read the rest of the statement. But I first have to put that on the screen. So breaking news, Fed lowers interest rates by 0.25%. Press conference at 2:30 p.m. at 2:30 ET. Okay. Let's read this. Okay. So this is the new statement from the FOMC. Oh, also, let me just change the clock here. I'm going to change the clock because we're waiting for the press conference here. But big news, new statement out. And we're going to say press conference in press conference in, all right, I think I did it. All right, 2812. Okay, here we go. Available indicators suggest that economic activity has been expanding at a moderate pace. Job gains have slowed this year, and the unemployment rate has edged up through September. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. Okay. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of its dual mandate and judges that the downside risks to employment rose in recent months. In support of its goals and in light of the shift of the balance of risks, the committee decided to lower the target rate for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of the incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. Fine. Fine. Oh, how many voted against? All right. Voting for the monetary policy action were 1, 2, 3, 4, 5, 6, 7, 8, 9. 3. Okay, breaking news. There were 3 dissents, which is, I think, the most in 6 years. So, 12, sorry, I should have got to this earlier. My bad. 12 people voted. 9 voted to lower by a quarter percent. 2 voted no change, and 1, Stephen Mirren, who is the person that he's the new governor that Trump appointed in September. He voted for a half-point cut. Okay? So again, let's just go over this again. 12 people voted. 9 voted for a quarter-point cut. 2 voted for a no cut. And 1, the person that Trump appointed in September, voted for the 3rd straight time for a half-point cut. As I understand it, Stephen Mirren has voted all 3 times he's voted for a half-point cut. He is the only one of the 12 that voted for a half-point cut. Now, hold on. NMCT thinks it's a hawkish cut. We got to look at the other projections too. There's projections that came out as well. So besides Stephen Mirren, nobody else wanted a half-point cut. But let's see projection materials. What's this? Okay, where do we find how many rate cuts there's going to be? What's the projection on that? Hold on, I might have to look this up. The information is here somewhere. I'm going to post a link to the document I'm looking at right now, and you can look at it. But let me just see here. Okay, I think is this it right here? Target range 2026, is that it? Is this it right here where it says 2026? The current rate is 3.5 to 3.75. So of the people vote, how many people, I think this is 12, 50, this is 19 people. This is 19 people, and they're saying number of participants with projected midpoint of target range or target level. So 4 of the 19 are saying for 2026, it should be what it is now. 3 of the 19 are saying rate should be a bit higher. 4 of the 19 are saying 1 more cut next year. 4 of the 19 are saying 2 more cuts next year. And then 2 are saying 3 cuts, 1 is saying 4 cuts, and 1 is saying 6 cuts. If I'm reading this correctly, because this is the 2026 projection, and this is the 19 people on the committee, the 12 voting and the 19 people who, it's not on the, is it on, there's 12 people who vote on the FOMC. But anyways, this is the 19 people I think of. There's the Board of Governors and there's also other members of the Fed. But of this 19-person committee, FOMC participants, even if they're not voting. So this would be the guidance, I believe, for next year if I'm getting this right. And as I'm seeing it, between 3.75 and 3.5 is where we're at right now, given this new cut. So of the 19, 4 say it should be the same next year. 3 say they should go up next year. 4 say 1 rate cut next year. 4 say 2 rate cuts next year. So only 4 of the 19 say more than 2 cuts next year. And I think 2 was what was being expected. So it's interesting. 11 of the 19 say less than 2 cuts next year. 11, if I'm reading this right, 11 of the 19 say 1 cut or no cuts or 1 raise, which doesn't seem very, this doesn't seem very supportive of lots of rate cuts next year. But let me see if I'm getting that right. That if I'm reading this right, it seems, I guess, hawkish is what you'd call it. But let me see if I've interpreted that right. And we're waiting for the press conference to start. Yes, Wall Street Journal says Fed signals it may be done for now. Okay? Yes. Fed signals it may be done for now. Okay. So this is certainly not a huge projection of lots of rate cuts next year. Hey, look right here. See? By the way, our viewer NMCT, thank you, thinks this is a hawkish cut. Thank you, Mitchell Rock Morton, the Rock Morton. Thank you, Mitchell. Yeah, we already talked about that. I'll talk about the Venezuela ship again. I just talked about it a few minutes ago. I'll talk about it in a few minutes. Thank you. I really appreciate that. So the Federal Reserve reduced its key interest rate for the 3rd time in a row today. 3rd time in recent months, but signaled that it may leave rates unchanged in the coming months, a move that could attract anger from President Trump, who has demanded steep reductions to borrowing costs. In a statement, the Fed Steering Committee said it may keep its rate unchanged in the coming months. Did I see that statement yet? We read you a statement. statement right here. Let's see. Yeah, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee is strongly committed to both supporting maximum employment and returning inflation to its 2% objective. This would imply raising rates. This would imply lowering rates. Okay, what are stocks? Are stocks being strongly affected right now by this? I don't know. I'll have to look. But again, this was not a. I mean, from what it was before, NASDAQ is even. The stocks are not so much different than when I checked about 45 minutes ago. They're not that different. Looks like the Dow went up a little bit. S&P went up a bit. NASDAQ went up a bit. Russell, not really much of a change. Style Mantis says it was all already priced in. Yeah, I mean, look, this was the general consensus today was that it was going to be a 1/4 point cut, but hawkish, which would be which would be not foreseeing lots of rate cuts next year. See, you can see here, Reuters says U.S. central bankers split with medians seeing 1 rate cut in 2026. That's not a lot. A majority of U.S. central bankers believe they will need to cut short-term rates next year, but are widely split over how much, with a large group opposed to any cuts at all and 3 penciling in a rate hike. Also, in a move unprecedented in the history of the Fed's so-called dot plot, 6 policymakers indicated they did not support even today's 1/4 point rate cut, penciling in 3.9 as the appropriate year-end rate for 2025. Let me show you this here. Here it is. I can show you the actual document. I'm going to post a link to it in the chat. Hey, 18 minutes till the Powell press conference. So check this out. Right, so this is it. So look at this chart here. So this right here, I wonder if I can draw it. Can I draw it on the screen? That would be the best thing. Let me get my pen up. So where rates are at right now, today, after the cut, I'm gonna show you where this is. Here. Okay, so this is where rates are right now. See, I drew it on the screen. So, of the 19 members of the committee, okay, 12 of the 19 said they think that this is the right place for rates to end up this year. 6 of the 19 said, no, we think it actually should not have been cut today. We think it should have ended up, it should have not have been cut. It should have ended up a 1/4 point higher than where it ended up. And 1, my guess is Stephen Mirren, who President Trump appointed 3 months ago. 1 said, no, it should be even lower. It should be another rate cut lower this year. And then for next year, you have these are where the 19 people think it should end up next year. 4 of the 19 said no more cuts after this. 4 of them said 1 more cut. 3 said raise them by 1 step, by 1/4 point next year. Then 4 said 2 more cuts next year. 2 said 3 more cuts. 1 said 4 more cuts, and 1 said 6 more cuts. By cuts, I mean 1/4 points. 1/4 points is what I'm saying. Okay. And again, of the people who voted today, 9 voted to cut them by a 1/4 point, 2 voted to leave them the same, and 1, Stephen Mirren, who President Trump appointed 3 months ago, voted for a 1/2 point cut. Okay. Hey, thank you so much to Confidence in God for your support. I really appreciate it. Thanks also Mitchell Pilot for your support. Really appreciate it. And C. Serwin for your support. Really appreciate it. So we're going to talk about the Venezuela ship. I'm going to mention that in a second. And we have coming up, look at this. Hold on, look at this. We have coming up, Jerome Powell is going to speak live, guys. He is going to speak live. Check it out. If I can get it on the screen for you. Coming up right here. There you go. Right there. Coming up, 2:30 p.m. press conference. I think I might have video from the room. I have video from the room. Breaking news, I have video from the room. Oh my gosh. Oh my gosh. We can look at the room where Jerome Powell is going to be speaking. Incredible. Give me a second. I will put it on the screen and I will update you on the ship. There it is. Live in Washington, D.C. Oh my gosh. Oh my gosh. There we go. So we'll hear from Jerome Powell. I think I'll probably switch to the Fed feed when he comes out. But there you go. Oh my gosh. Wow. Electronic Progression says uncredible. Let me update you on the story about the Venezuela ship. By the way, I really appreciate everybody tuning in. Thank you so much for being here with us. We're waiting for Jerome Powell to speak. And so Bloomberg is reporting that the U.S. has seized a sanctioned oil tanker off the coast of Venezuela. Bloomberg calls that a serious escalation of tensions between the two countries. Let me get you some more about this. We might have to do a stream on that later today or something. Is anybody else reporting that besides Bloomberg right now? Let me see. Reuters is reporting it as well. Reuters reports it as well. Reuters says the U.S. Coast Guard has seized an oil tanker off the coast of Venezuela, officials tell Reuters. The Coast Guard referred questions to the White House. Breaking news. So Reuters is reporting it as well. That was from Idris Ali. All right, I'm going to keep an eye on that while we wait for this press conference to start. Hang on a moment here. Hang on a moment here. I want to read some of your comments too. The Bloomberg says it was a sanctioned oil tanker. I mean, it seems like maybe the U.S. is trying to put pressure on Maduro by preventing him from selling his oil. That's what it would seem like. Also, he supplies oil to Cuba, I believe. Am I wrong about this? Is that still happening or not? I think it does. Yeah, I mean, I'm looking at a Reuters article that talks about Cuba importing oil from Venezuela in November. All right, so if you're just joining us, the Fed lowered interest rates by 1/4 point which means at this point, they're more concerned about the economy slowing down and unemployment going up than they are about inflation. But they were cautious about what's coming next year. The majority of Fed members thought there should be either only 1/4 point rate cut next year or no rate cut next year or a rate raise next year. If you add it up, 11 of the 19 said either one more rate cut next year or no rate cuts next year or one rate increase I'm talking about a 1/4 point next year. So this was seen as a hawkish cut, where it's not, they're not signaling at the moment lots of rate cuts next year, at least for the moment. So we'll have to hear what Jerome Powell says about this. And remember, the two goals, the two congressionally mandated goals for the Fed are to get full employment. You want as many people working as possible, and also keep inflation low. But lowering interest rates can raise inflation, and raising interest rates can cause employment to go down. So these goals, you might raise, depending on which goal you think is most in need of addressing, you will want to raise or lower interest rates in theory. So we have 8.5 minutes until the press conference. Stickler for Change says, were they just worried the market would spook if they did not cut? Sydney says, where was the oil tanker going? I don't know yet. I don't know the specifics on that oil tanker that Reuters and Bloomberg are reporting that the U.S. seized off the coast of Venezuela. I don't have the specifics on that yet. Bloomberg says most Venezuelan oil goes to China, but usually through intermediaries. So, I don't know. All right, so I'm keeping an eye on that as we wait for this to start here, bringing you live coverage. Give me a moment. Give me a moment. Some of our viewers are having problems with X. Some of our viewers are having problems with X. My X is working. Guys, my X is working. But some of you are having problems with it. Oh, maybe it's not working now. X seems to be down. X is not working for me right now, guys. So there. X seems to be down. X is having an outage, it looks like. I'm looking at Down Detector. It is showing that a lot of people in the last couple minutes are reporting that X is down. Mine just stopped working, I think. Oh, now it's working again. It just started working again. It just started working again. So maybe it was just temporary. It is working again. I wonder what President Trump's going to have to say about the interest rates. So again, it's not just that they lowered the rates. A big part of the story today is that the Fed did not signal making very many rate cuts next year. Over half of the committee said they would want either only 1/4 point cut next year or no cuts next year or raise them by 1/4 point next year. That's over half of the committee, which I'm guessing President Trump is not happy about. So you're looking at the live show. Is there a volume on this? I don't. Oh no, they're playing music. Hold on. Wait. Where is that coming from? Oh, hold on. I got some audio from the room. I got to put my headphones in. I got audio from the room.
Hi, everybody. We'll get started in about 5 minutes. If you could take a second just to check your electronic devices, make sure you silence your phones, everything else that will make noise. When the news conference begins, the chair will allow you to make a statement and then take questions. Michelle will call on folks, so please raise your hands if you have a question. When you are called on, there will be a microphone on either side of the room. Please wait to get the microphone.
Okay. We are waiting for the Fed press conference with Jerome Powell. In 4 minutes, it's going to start. 4 minutes. Our viewer NAV thinks Trump will likely make a big splash by trying to fire Powell again. Now, Powell's term is over I think in the middle of May. As his term as the Fed chair. Hey, thanks, Confidence in God, so much. Thank you. Also, Mitchell Pilot. Thank you, Mitchell Pilot, for your support. Really appreciate it. We're waiting for Jerome Powell. Our viewer D. Fristo thinks it would not be soon enough, May. Hoosier Girl says, wow, just 20.25%, big whoop. We are keeping an eye on the story that multiple outlets report the U.S. has seized an oil tanker off the coast of Venezuela. Which Bloomberg calls a serious escalation. So as you're listening to Jerome Powell, remember the two goals of the Fed. They want to have maximum employment, but they also want to keep inflation down. So these are the goals they're balancing. So if they're more worried about the jobs, about people being unemployed, they're going to want to lower rates. If they're more worried about inflation, they're going to want to raise rates. Now, they can be worried about both. At this point, there's signs to be concerned about both. Inflation is higher than their target of 2%, but in spite of that, they're lowering rates because they think the bigger risk is on the job side, not the inflation side. But I'm sure you will hear Powell talk about those things and the relative risks from both. So keep that in mind as you hear him speak.
2 minutes.
Justin King says labor market is going to be the big factor. Oh, did they just say 2 minutes? Did they just say 2 minutes? Okay. I think I missed that. I think they just said 2 minutes. I'll leave my clock up there. What I'm probably going to do is when this starts, I think I'm going to switch the feed to the Fed feed because they'll actually show you the questioners. So when it starts, give me a moment when it starts. I might switch the feed. Okay? So bear with me. You might see the video switch and you might hear Powell's voice, double Powell's for a couple seconds as I switch it for you guys. But I think I'll switch it to the best feed for you. I think my clock is going to maybe off by a few seconds because it'll probably take another minute or so after the clock goes to 0. I'll turn the clock off. Hey, thanks Adrienne Hall for your support. I really appreciate that, Adrienne. All right, any moment now. Oh, hold on. All right, I have the other feed. Wait. There it is. That's the one we want. Here he comes.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside. Funds rate by a quarter percentage point to 3, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our 6 of those now, too. So it is, it's partly that consumer spending is held up. It's been resilient, and to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Thank you.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the 2 goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. You talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I could make that case. It's a close call. We have to make decisions. And we always hope that the data will give us a clear read, but in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmerosa, The Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set, but you are right about those two 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now, and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire. Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, you know, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, you know, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, you know, if you look ahead, you will see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. You know, we're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but you know, this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, you know, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That, you know, we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, you know, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation? So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. But really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. You know, it's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Enda.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
on the policy what? On
the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
You know, it's not so stark as that. The views are more varied on in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine.
Thank you. Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low low-rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made it expensive for them to move. And, you know, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and you know, really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, you know, a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, you know, we see higher inflation. As I mentioned, most of the inflation over target is from goods. And we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? You know, so that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that you know, the labor market gets tight or the economy gets tight, and you see, you know, just traditional inflation. I don't see that as particularly likely. But so I think, you know, again, you know, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had, you know, 5-6 years of 2% productivity growth. This is higher. You know, this is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, you know, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. You know, the pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, you know, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed Chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as Chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control. coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's, I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
All right, so that was Chairman Powell. And by the way, while Chairman Powell was speaking, President Trump confirmed that the U.S. has seized a large oil tanker off the coast of Venezuela. So I would actually like to be able to show you President Trump talking about that. If I can find the exact part he said it in. He is speaking right now. Let me put up, President Trump is live right now. So let me just throw up on the screen President Trump. We'll take some of your comments about the interest rates and everything soon. But let me throw up President Trump on the screen.
2,700 counties against 525. That's pretty good, right, Cristiano?
Pretty good.
2,700 against 525. 525. That's why when you see the maps are all red, except for two little blue lines on the right and the left side of the map. They're probably changing too. Americans are great builders, and in the Trump administration, America is once again a country where innovators get a green light. You have the greatest innovators in the world at this table, and representing a lot of their friends who are competitors and friends. But we're really on a big move to get rid of red tape so they can run their businesses and not have to wait 10 years for an approval. In the old days, getting some of these approvals for plants that are already being built would have taken 10, 15, even 20 years prior to rejection. You'd get rejected. You'd work 20 years and then you'd lose 5-4. And we're getting plants approved in a matter of weeks. The biggest plants ever built in a matter of weeks. For every new regulation, we're slashing more than 10 old regulations. So we're not allowing regulations unless they slash 10 old regulations. We did that in the first term, and we cut more regulation than any administration ever. In our first term, we have the all-time record. I think we're exceeding it here. In fact, now it's 1 in 24 is the number we're at. It's 1 in 10 you have to do, otherwise we're not letting you do it. But we're actually up to 1 in 24, so we get rid of 24 regulations for every one. That's not a bad deal, right? And it's been very exciting, actually, but including we're allowing 100 in the great big beautiful deal. We're allowing 100% expensing for capital expenditures.
I'm going to see if he answers questions. He very well might take questions later in this appearance. I can't find I saw the quote reported about him saying, he said at the start of the roundtable that the U.S. had seized a large oil tanker. I think he said on the coast, meaning off the coast of Venezuela. If he takes questions, I will show that. I want to give you a bit of the reporting, though, about this oil tanker that the U.S. has seized. Let me just check one thing here and see if I can hear him talking about this.
A tanker.
Oh, I found it. Let me show you. I'm going to show you guys right now where he talked about this, where he talked about the oil tanker. I'm going to show you that right now. Hang on. So this is going to be from about 20 minutes ago when he started see if I can pull it up here for you. Give me a moment. I need to.
From the standpoint of news, as you probably know, we've just seized.
Okay, here it is.
News.
All right, here is President Trump about 20 minutes ago announcing the oil tanker news.
Nice to see you. Well, thank you very much. It's been an interesting day from the standpoint of news. As you probably know, we've just seized a tanker on the coast of Venezuela, a large tanker, very large. Largest one ever seized, actually. And other things are happening, so you'll be seeing that later, and you'll be talking about that later with some other people. Very excitingly for me and for the country, we've just launched the Trump Gold Card. It was...
I want to play that again. He said other things were happening too that we'll see.
We just seized a tanker on the coast of Venezuela, a large tanker, very large. Largest one ever seized, actually. And other things are happening, so you'll be seeing that later, and you'll be talking about that later with some other people. Very excitingly...
He said the largest one ever seized. That's what he said. The largest one ever seized. And you can see here, Reuters reports, the U.S. has seized an oil tanker off the coast of Venezuela. 3 officials told Reuters on Wednesday, in a move that raised oil prices and is likely to further inflame tensions between Washington and Caracas. President Trump has ordered a massive U.S. military buildup in the region, including an aircraft carrier, fighter jets, and tens of thousands of troops. The officials, speaking on condition of anonymity, said the operation was led by the U.S. Coast Guard. They did not name the tanker, which country's flag it was flying, or exactly where the interdiction took place. Oil futures rose following news of the seizure after trading in negative territory earlier in the day. Global crude futures were trading up 41 cents at $62.35. U.S. West Texas Intermediate futures up 21 cents at $58.46 a barrel. Our viewer Taste Vim says this seems escalatory. I should change the headline here real quick. Well, hold on a second here. Maybe we'll get some more clarification on this today from the U.S. government today. In case you missed it, the Fed lowered interest rates as expected by 1/4 point, but they did not. It was seen as a hawkish lowering because the Fed did not seem to be signaling lots of rate cuts anticipated for next year, although that could change. So the majority of people in the Federal Open Market Committee said they expected one or fewer rate cuts next year, with a rate cut being 25 basis points. So we showed that, and we talked about that. We showed you Fed Chair Powell's news conference there. I want to take a few comments from you guys. Hold on a second here. What is this here? Hold on a second. And then I'll keep an eye to see if President Trump takes questions. He's talking with business leaders right now, but maybe he'll take questions at some point. I don't know. So I'm keeping an eye out for that. Let's see here. Yeah, I don't know what the other things he talked about that were going on in Venezuela that he said we'll hear about later. I don't know what that, he said other things were happening and we'll be seeing that later. I don't know what he's referring to there. Yeah, all right. So what I'm going to do right now, here's what we're going to do. We've been on for a while, and we're going to keep the stream going a little longer, even though we covered the interest rate things, because I want to see if Trump is going to answer questions. And I want to take a few more comments from you, but I haven't taken a break yet. And also, so you may have noticed that, by the way, for the moment, I don't need these on. You may have noticed that this broadcast, well, some of you probably noticed, it's a sponsored. Oops, you may have noticed that there's a typo, and I said U.S, comma. Well, we got to fix that first. So this is one of our sponsored broadcasts, and I think there was a typo as well. Hold on a second here. Oh my gosh, everything's all messed up on the headline. Oh my gosh, crazy. Hold on. Let's fix this here. Right. Are we good on the headline? Okay, so I'm going to see if President Trump is taking questions, and I'm going to take some more of your comments on the air. But this is a sponsored broadcast, but you didn't see any. Normally when we do a sponsor, we have a sponsor, Gold Safe Exchange. Normally when we do a sponsored broadcast, you'll see, we'll do a couple of ads where I say something about Gold Safe Exchange, and we haven't had any. So how is it a sponsored broadcast if we haven't been playing any of those ads? So what we decided to do today is something a little different. I know our viewership hate things that are different, but bear with me if you can. So instead of doing the ads today, what the thinking is that because we're covering like a finance thing, when Gold Safe Exchange first came to the channel asking to be a sponsor, I wanted to look into it, so I actually met virtually with the CEO and owner Derek, who actually has been working in finance for a long time and working in money stuff for a long time, and he actually has a bunch of interesting views on things. So we thought today, rather than do the ads, what we did is a little mini interview segment where I asked Derek a few questions about the economy, and he gave his opinion on it. He does talk about his company a bit in it, and it is a sponsored segment, but most of what we talked about is kind of about stuff that we talked about today. So instead of doing the ads, which we would have done earlier, we have this mini interview segment with Derek from Gold Safe Exchange, the CEO and owner. I think he's an interesting guy, so I think you might find it interesting. If you don't, you don't, but we're going to check that out now, and as soon as that ends, we're going to run this mini interview segment, and as soon as that's over, we're going to talk more about, I'm going to go back and see if Trump's answering questions, and I'll get you some more on the oil tanker if I can, and we'll take some more comments for you guys. So here it is right now, without further ado. This is a rare thing. We don't usually do that here, but just to do something different, we're trying this today. So here's the mini interview segment from our sponsor, Gold Safe Exchange, with Derek, and I'll be right back after. You know, a number of people these days are investing. That wasn't it. Here is the segment with Derek. We are here with Derek, the CEO of Gold Safe Exchange. Thanks, Derek, for coming on. Do you want to tell the viewers a little bit about yourself?
So my name's Derek, Ned. I am the owner of Gold Safe Exchange. I've been in the physical precious metals world for over a decade. I started working on Wall Street in high school. I got some internships at some investment banks, and I've just been involved with money ever since.
Derek, as we move into 2026, there's a lot of talk about what's going to happen with the Fed and interest rates. How do you see things playing out with the Fed and with the economy in general?
We know that right now, credit card delinquencies are 12%, which is a 15-year high. Auto repossessions have hit nearly 2 million last year, and they're on track to do the same this year. We've got a job market that is weakening. We've got U.S. employers did announce about 150,000 layoffs in October. So you've got government and corporate spending that's pushing the barbell up, but everybody's sitting here going, it doesn't feel like the economy's doing great. I don't feel great. I don't feel richer. I see the stock market going up, but I don't feel it. It's not helping me personally. So I guess the main thing is the Fed can lower rates, the Fed can not lower rates, the Fed can hike rates. It'll have short-term effects, but if you want to talk about the long-term effects, the government has to print money. And if they and it doesn't matter what the rates are, they're going to have to keep printing money. So the government has to continue to print, and every dollar that the government prints creates more inflation.
Okay, so it sounds like you think inflation is coming. Do you think how the midterm election turns out in November could affect that at all?
We didn't get into the financial situation we are as a country because of this administration or that administration. It wasn't Team Red and it wasn't Team Blue, okay? This was collectively nearly 50 plus years of bad financial decisions created by our political leaders collectively, right? Regardless of who's in power. And so I don't like to focus on, a political solution, because the problem that we have is a math problem, not a political one. And it's gotten to the point where I don't think any one administration or any one legislative session, whether it's 2 years or 4 years, is going to be able to do the hard thing. And the hard thing is austerity. The hard thing is stop the spending.
Now, you have a precious metals IRA company. I know our viewers know that. And I know also you feel strongly that precious metals, for some people, can help diversify their portfolio. Can you give our viewers a little sense of why you think that?
When I talk to people about what precious metals is, it's insurance on your money, right? It's the oldest form of money that we have. Kings and queens have been murdering each other over this stuff for thousands of years. Anybody that's worked with me has heard me say that sentence, right? And it's something to really think about, because it's older than the U.S. dollar. It's older than the U.S. government. It's older than, Europeans living on the North American continent, right? It's older than, everything. So when things, and to tie it back into your question, when the manure hits the fan, right, there's a lot of things that we don't know what's going to happen. But the reality is something that has been money for thousands of years is not going to stop over the next 20, 30 years of your life. Right? It's not going to change because all of a sudden World War III broke out. In fact, it's probably going to become more valuable.
What about crypto? Do you have thoughts on Bitcoin in the crypto world at all?
In fact, my coffee mug is a Bitcoin coffee mug.
Well, there you
right?
go.
So I do like Bitcoin. I do. I think it's a great asset. I think cryptocurrency has a bright future potentially. But here's the problem. For most of my clients who are, again, these are people that worked very, very hard, right? They've accumulated some savings, and now they're planning on retiring, right? Well, the problem with cryptocurrencies is that they're still so new, right? And they're still extremely volatile. Do I think crypto can go up? Absolutely, and I think it will eventually, right? I think it's going to be I think Bitcoin specifically, not crypto as a big whole thing. If we just talk specifically about Bitcoin as a commodity, I think it definitely has potential. Problem is it was $120,000 2 months ago, and now it's somewhere in the 80s or 90s, right?
Well, I appreciate you taking the time to talk today, letting the viewers hear from you. And also, of course, I really appreciate you sponsoring the channel, so thank you.
One of the reasons that I gravitated towards wanting to sponsor, Agenda Free was because, in so many of my competitors, right, they focus on, going towards one political demographic or the other. And one of the things I really appreciate about you is you're just the news, right? And that's kind of where I fell into this space is like, look, I'm not going to bash Trump. I'm not going to bash Biden, because at the end of the day, that's not what I'm about, right? I'm here to just look at the facts, and that's all I tried to share with you on this interview is just that. And if there's anyone listening to this, right, the reason I'm partnering with Agenda Free is because I know that if you're watching this channel and you're a fan of Steve's, then there's probably an alignment here, and there's probably some things that we talked about today that you would like further clarification on. One of the benefits that I've added for everybody that's watching this is you can call my company and you can ask us any question that you have about the stuff we talked about, or anything in that, gut feelings that you have, concerns that you have, and we're not going to charge you for those consults. And I'm sure that we're not going to high pressure sales tactic you. We're not going to try to pressure you into doing anything. We want to educate you. And if all we get to do is just educate more Americans as to what their options are, and we don't get to do business with them, that's great, because we know that if we're doing the right thing, right, the right things will happen for our company. And so that's my only thing I'd like to add is just it's really just coming from a place of let's work together to help you to understand what the hell is going on. And if that means getting you some gold and silver, great. If it doesn't, if it just educates you more and you're like, you know what, I think now that I know more, I realize I don't need this thing, then great.
Awesome. Thank you, Derek, for being here. All right. So again, something a little different today. That's not something we do very often, but thought it might be a nice change, especially because we were covering a financial topic today. So I'm looking right now at President Trump, and he's still not answering questions. I'm not showing, President Trump is doing a roundtable right now with business leaders. And he does a lot of events. We don't cover all of President Trump's events, but sometimes with his events, it'll be about one thing, and then he'll just start taking questions after. So I'm keeping my eye on this because he earlier, one reason I'm keeping my eye on it is at the start of the meeting, he confirmed that the U.S. seized an oil tanker off the coast of Venezuela, which is huge news. And I'm waiting to see if there are questions, because maybe he'll get asked more about that. Or maybe he'll get asked about the Fed lowering interest rates, but seeming to not be so enthusiastic about lowering them a bunch next year. I'd be very interested to hear what he has to say about that. But right now, he's not taking questions yet. So I want to take some comments from you guys. Let's give it a few minutes. Let's see if he takes questions. And if he does, I'll certainly put that on the air and see what he says. And I also want to just see if we have, by the way, our viewer Marine Boy says, to war we go with Venezuela. Oh, Jennifer Eller says there's so much going on. Matt Phillips says, oh great, now we are pirates. I want to thank our moderators too. Hold on a second. Here, look, let me show you this right here. See, the latest. Trump says U.S. has seized an oil tanker off the coast of Venezuela. President Trump said today that the U.S. has seized an oil tanker off the coast of Venezuela amid mounting tensions with the government of Venezuelan President Maduro, says AP. It's the Trump administration's latest push to increase pressure on Maduro, who has been charged with narco-terrorism in the U.S. The seizure was led by the U.S. Coast Guard and supported by the Navy, according to a U.S. official. A day earlier, the U.S. military flew a pair of fighter jets over the Gulf of Venezuela in what appeared to be the closest that warplanes had come to the South American country's airspace since the start of the administration's pressure campaign. Trump has previously said land attacks are coming soon, but has not offered any details on location. Let me read some comments. Orcs Must Die says he's stealing oil tankers now. Great. One of our viewers mentioned flight radar. Hold on a second here. The U.S. has been flying military planes near Venezuela for months now. I'm not seeing anything hugely tracked on flight radar. Yesterday there were these two fighter jets that like 20,000 people were tracking. But, the most, I don't know where that is. That's not there. So, normally if there's a military plane, there's a U.S. Air Force plane right there. But again, frequently the U.S. has recently been flying military planes near Venezuela. Is he answering? Let's see. Hold on a second here. Oh, hold on. I think President Trump's taking questions. President Trump's taking questions. Hold on. He's taking questions. Let's go to President Trump in the White House. He's taking questions. Hold on.
So, well, we just want people to come over here and safe. We want safety. We want security. We want to make sure we're not letting the wrong people come into our country. We're getting rid of a lot of bad ones from jails, from mental institutions, drug dealers. We're getting a lot of bad people, murderers. 11,888 murderers, half of them, almost exactly half of them, committed more than one murder. We're getting rid of them. In some cases, we don't even want to get them out. We put them in jail because we're afraid they're going to come back into our country. We're not going to let them back in. So we've taken a very tough stand. And you see where we've been, like Washington, D.C. now, people walk down the streets. They go into restaurants at night. It's beautiful. It's like this beautiful thing to see, because till I got here, this was a very, very bad place. We had a terrible thing happen 2 weeks ago with terrorism with regard to 2 National Guards people that are so phenomenal. One is no longer with us, and one, amazingly, we weren't looking with great hope on that, that Andrew. And today he got out of bed, actually, stood up, didn't say anything. It's a little early, but the chances of Andrew, other than his mother, who said, nope, he's going to be okay. His mother was the most positive person. And could be that she'll be right. It's pretty amazing. Made progress. It was, both of them were so badly hurt, we never thought that one could survive. So it looks like Andrew's doing pretty well.
Mr. President, the winner of the Nobel Prize dedicated the prize to you, the Nobel Peace Prize, and she left Venezuela at a great risk to make it to the ceremony. There is a risk she could be arrested, actually. What would happen if she's arrested? What message do you send, or would you send to Nicolas Maduro?
Well, arrested by who? The Nobel Prize Committee? That's probably the ones that would arrest. I don't know anything about it. She was very gracious. She said I should have gotten the Nobel Prize, and I don't, I'm doing this to save lives. I'm not doing it for any other reason. But no, I don't like if she would be arrested. No, I wouldn't be happy with that.
Mr. President, Senate Republicans currently have a health care proposal that would take away, let those ACA subsidies expire, and then put about $1,000 in people's HSAs. Do you think that is enough money, and how do you ensure that people who will see those tax subsidies expire won't see their health care costs skyrocket?
Well, the Unaffordable Care Act, which is Obamacare, they call it now the unaffordable because it's unaffordable. It used to be called the affordable, but it was never affordable. It was always bad. It was basically designed for the benefit of insurance companies. And what we're doing is we want all of the billions and billions of dollars that went to insurance companies to go directly to the people, and they can buy their own health care. And people love it. I don't know if the Democrats are going to approve it because they want the insurance companies to make money. It was a scam. Obamacare was a scam. But we're going to see. I mean, the Republicans, I can tell you, want the money to go to the people. And we're winning that battle. The Democrats are having a hard time with it because they're in the pocket of the insurance companies. Yes, please.
Yes, we spoke to some European leaders today, I think, sir, about Ukraine.
I did.
Could you tell us about that? And is there a new revised peace plan that Ukraine has presented?
The leaders of France, we spoke to, and Germany, and UK, all very good leaders, very good friends of mine, and we discussed Ukraine in pretty strong words. And we'll see what happens. I mean, we're waiting to hear answers before we progress. We're not spending any money in Ukraine. We're selling basically missiles and everything else to NATO, and NATO's paying us, and then they distribute it to who they want. I guess they're mostly distributing to Ukraine, but we're not spending money. But we're spending a lot of time and a lot of effort, because last month 27,000 soldiers were killed. Both, think of it, 27,000. That's if you take a football game, and take half the stadium, that's 27,000. So 27,000 soldiers were killed. Russian and Ukrainian soldiers were killed. And I want to see that stop. We'll find out. Look, there are a lot of things happening right now. A lot of people say it's closer than it's ever been. It's a war that would have never started. If I were president, would have never started. It's a war that should never have started. But we'll have it figured out, I think, within a pretty short
When you say very strong terms, sir, could you explain that?
Well, I think we had some little disputes about people, and we're going to see how it turns out. And we said before we go to a meeting, we want to know some things. You know, they would like us to go to a meeting over the weekend in Europe, and we'll make a determination depending on what they come back with. We don't want to be wasting time. Sometimes you have to let people fight it out, and sometimes you don't. But the problem with letting people fight it out is you're losing thousands of people a week. It's ridiculous. The whole thing is ridiculous.
Mr. President, two questions. One, the oil tanker. Who owns that oil tanker?
You'll get that information later.
Okay, and have you spoken to Maduro since your last conversation?
No.
Or has it only been one conversation?
No.
And when you say that the European leaders want to have a meeting over the weekend, are you talking about with Zelensky or with them?
With Zelensky and us.
And you said in an interview yesterday that you think it's time for Zelensky to start accepting things. What things are you talking about?
I think he has to be realistic, and I do wonder about, how long is it going to be till they have an election? It's a democracy. It's a long time. They haven't had an election in a long time. It's losing a lot of people, and it's possible that the people, if you look at the polls, I will say 82%, there was a poll that came out, 82% of the people are demanding a settlement be made, Ukrainian people. They want to see a settlement be made. I understand that. They're losing thousands and thousands of people a week. They want to see it ended. And I do say, at what point, when do they have an election in Ukraine? That's not casting dispersions on anybody, but they do have a massive corruption situation going on there. And they do say, when are they, people are asking this question, when do they have an election? Are they going to have an election? Or are they going to just keep it going like this? So I think it's time to get that war settled. And I think it's a war that can be settled. But it takes two to tango.
Mr. President, Warner about the new owners of Warner Brothers Discovery to make changes at CNN, big changes, and have you spoken to Jared about it? What are you doing with him, or are you just sort of wall him off a little bit?
So what do you want to know?
What changes do you want to see at CNN under new ownership?
Well, I'm not involved in that. I will be probably involved, maybe involved in the decision. It depends. You have some good companies bidding on it. I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN, so that they can spend even more money spreading poison, because it's lies. And it's a disgrace. So I wouldn't want to see the same company end up with CNN, the same company with money, because right now they don't have too much money, but they have value, I guess, based on the bids. They've got value. But I think CNN should be sold, because I think the people that are running CNN right now are either corrupt or incompetent.
And that'll be a factor in the decision making, because we've got some.
Well, in my mind, but I can be talked out of that by some very talented people that we have, antitrust people. But I just think that the people that have run CNN into the ground, by the way, nobody watches, very few people watch. I don't think they should be entrusted with running CNN any longer. So I think any deal should be guaranteed and certain that CNN is part of it, or sold separately. But I don't think the people that are running that company right now and running CNN, which is a very dishonest group of people, I don't think that should be allowed to continue. I think CNN should be sold along with everything else.
Sir, you spoke about affordability earlier in your remarks and yesterday in Pennsylvania. How much more can we expect to see you on the road kind of delivering that message? And are you worried at all about the Democrats winning a couple more things in Miami and Georgia?
I don't worry about it. You know, it's like statistically, it's amazing. When you win the presidency, even if you win by a landslide like we did, and even if you do a good job, and some people say we've done the best opening 10 months in history, you know, in the history of the presidency. I think we have. Who's done better? We ended 8 wars. We have the strongest economy. We have $18 trillion coming in, which is more than any country had, times I think 5 or 6. 18 trillion is a lot even in your standard, right?
Yes, sir.
Even for that guy, 18 trillion is big numbers. But we have $18 trillion coming in. Pretty amazing, right? I think Qualcomm would be very impressed if they had even a little piece of that. So we've done a great job. But for whatever reason, and nobody's been able to give me an answer, when you win the presidency, you seem to lose the midterms. Even if you win the presidency by a lot and you do a great job as president. You know, some presidents have done good and they've lost, I think it's like 2 times in the last many, many years it's been won. I don't know why. It doesn't make sense. Usually I can figure things out, but I don't know why, but that seems to be. But other than that, we should win because we're doing great. The economy is roaring. I think the economy is only going to go, better with all this money pouring in. We have factories being built. And forget about AI. We have AI more than anybody. We're leading AI by a lot. But we have many car companies coming in from Canada, from Mexico. They're closing up. They're coming in from Mexico. They're coming in from Canada, from Japan, from Europe, all over Europe, Germany, all over Europe. We're doing great. But for whatever reason, it doesn't matter how well they're doing, good and bad. The bad you understand, but even when a president is doing well, they seem to not do well in the midterms. So we're going to try and change it. There should be no reason for it. If anybody at the table can figure out, Bruce, a nice psychological reason, but so I want to win, and winning the midterms is important. People want us to win the midterms, and I think we have great spirit. We should win the midterms, yeah.
Under Joe Biden's administration, during COVID specifically, Biden removed the safety standards on abortion drugs. Now I'm hearing from a lot of pro-lifers that they're very anxious because yesterday Bloomberg reported that your FDA is slow walking a review of the abortion drugs that Secretary Kennedy promised.
Yeah,
How
I don't
soon
know.
do you want to see that?
I'll find out. I'll ask them.
Do you want to see it?
I don't think they're slow walking anything, but I'll find out. Yeah.
Mr. President, any update on the clashes between Thailand and Cambodia, sir?
Yeah, I think I'll have to make a phone call. I was going to say that the Thailand and Cambodia, one of the 8 that I settled, they've been fighting for a long time. They've been fighting for a very long time, many, many, many decades. But I got along great with both. I found they were 2 great leaders, 2 great people, and I settled it once. I think I can do it pretty quickly. I think we're scheduling a phone call tomorrow.
Mr. President.
With Thailand.
On the Fed Chair.
With Thailand, if just to answer, Steve, with Thailand and Cambodia, I think I can get them to stop fighting. Who else can do that? Think of it. Settled 8 wars. Every once in a while, one will flame up again, and I have to put out that little flame. I have to put it out, but we're going to put it out again. So I think I'm scheduled to speak to them tomorrow and see if I can. It was unfortunate what happened. I mean, I know exactly what happened. It got it started a little bit, but we'll see if we can put it out.
We're interested in the seizure of this tanker. What happens to the oil on that ship?
Well, we keep it, I guess.
Where does it go? What port does it go to?
Well, you have to follow the tanker. You're a good newsman. Just follow the tanker.
Do you know where it was going? Was it going
Follow
to
it. Get a helicopter and follow the tanker.
Is it true it's going to
But
Cuba?
I assume we're going to keep the oil.
Mr. President, on Fed Chair, Kevin Haskett said you were going to announce your decision within the next 2 weeks. Is that correct?
Maybe.
Are you doing your interviews with finalists today?
Well, I'm meeting with Kevin Warsh today, so I'm meeting with him. And I sort of have a very good idea what I'm looking for. Again, I'm looking for somebody that will be honest with interest rates. That's all. I just want honesty. Our rate should be much lower. Our rate should be the lowest rates in the world. Because all these countries that you see, you know, with low rates, many of them are low because of us, because they suck so much money out of us. But that's not happening anymore. We should have the lowest rates in the world. And without us, none of them really exist as an economy. I mean, I can show you these really prime, really wonderful countries. They've had nothing but success. It's because they took so much out of the United States. I mean, it's one of those little problems. I want to see that when we do well, we're rewarded for doing well, not the way it's been for the last pretty long period of time.
Are you asking for finalists to pledge to lower rates? Are you asking these finalists to pledge to lower rates if they become the chair?
No, I'll be asking questions and I'll be able to figure it out.
Mr. President, we have 3 countries sending drugs to the U.S., Mexico, Venezuela, and Colombia. And you talked to the president of Mexico, you already talked to Nicolas Maduro. Have you considered talking to the president of Colombia, whom you call a drug dealer?
No, I haven't really thought too much about him. He's been fairly hostile to the United States. And I haven't given him a lot of thought. He's going to have himself some big problems if he doesn't wise up. Colombia is producing a lot of drugs. They have cocaine factories that they make cocaine, as you know, and they sell it right into the United States. So he better wise up, or he'll be next. He'll be next too. And I hope he's listening. He's going to be next. Yes,
Mr. President.
Because we don't like people when they kill people, and they sell drugs. They kill them in the United States, and Colombia is a major manufacturer of drugs, meaning cocaine in particular, as you know.
Thank you, Mr. President.
Thank you.
Multiple House Republicans in recent weeks, days, have been critical of Speaker Mike Johnson. I wanted to ask you if you're still confident in the Speaker to keep his conference together ahead of the midterms, and how often are you speaking about him?
I think Mike Johnson is great. You know, he's had a majority of 2, 3, 4, then back to 2. We actually had 1. So we were 1 heart attack away from disaster. So everybody prayed for everybody's health. I think Mike Johnson's been a fantastic speaker. I mean, a very hard job because, you know, when you have a small majority, and we got the biggest bill in the history of our country approved, the Great Big Beautiful Bill. I call it the Great Big Beautiful Bill. There are different names for it, but to me it's a Great Big Beautiful Bill because it gives the biggest tax cuts in history, the biggest regulation cuts in history. No tax on tips, no tax on Social Security, no tax on overtime. I think Mike Johnson's been a great speaker. I think few people could have done that job.
Do you want to see another big package move through Capitol Hill the next year? Or?
Well, we don't need it because we got everything. You know, this was supposed to be 17 bills. And I think it was my idea, but, you know, with the concurrence of people that have done this a long time. And I said, why don't we make it 1 bill? Because it's very hard to get things approved by the Democrats. And it worked out because there was something good for everybody. If we would have done 17 bills, we wouldn't have gotten 1/3 of them approved. There was something great for everybody in the one, you know, the Great Big Beautiful Bill.
Yes, good to see you, Mr. President.
Hi.
I'd like to follow up on the event last night in Pennsylvania. Huge crowd turned
Yeah,
out there.
big crowd.
It seemed like Rally Trump was in prime condition last night. You enjoyed it. Can you just give me your thoughts on that? Then I do have a question on the gold card.
Last night was amazing in Pennsylvania. We had a tremendous crowd. It was like freezing. And the people, the thousands of people on the sidewalk trying to get in, or the streets. It was an amazing evening, actually, and I think people really enjoyed it. I enjoyed it. You could tell that.
I can tell that you enjoyed it.
I enjoyed it. I really did. Well, you know, it's easy to enjoy when you do a good job, and, you know, when you can talk about things in a very positive way. It's hard not to say. We have potentially the greatest economic boom in the history of the world. It's being built right now. And when it opens, there will be nothing ever in history like what's happening in our country. And, you know, Washington, D.C. is safe, and Memphis is now. Look at Memphis. Crime is down 60% in Memphis. We just got there 3 weeks ago. And we're going to have New Orleans. New Orleans was we just sent a group of people there, and crime is down 28% in about 3 days. No, we do a good job, you know, and these are central casting people. These people they're very tough people if they have to be. They're very good, they're great patriots, but they are the toughest, and They don't take any nonsense. And every place we go, we knock down crime. Too bad that we're not invited more into Chicago, because we could save Chicago very quickly. But even that, we're doing it on a minimal basis until, at some point we'll just go in and do what we have to do if the governor doesn't wise up. They got a bad governor, they have a bad mayor. I would say they're both incompetent, but it's hard to believe that people don't want to stop crime. We could stop the crime in Chicago in about 2 weeks. Go ahead.
My question is on the gold card. I apologize if I missed the answer to this. Is there a limit to how many gold cards these companies can buy?
Howard?
So the program is part of the already approved visas. So we're just going to have great people come into this country. The average green card holder earned less than the average American. So they were more likely to be on the dole and be on our assistance programs than average Americans. And the idea is from President Trump, he wants to raise it, bring in the best people into America. So same visas, but now just full of the best people.
Basically, it's a green card, but much better, much more powerful, a much stronger path. And a path is a big deal. Have to be great people, but much stronger path. And it also, in addition to that, helps companies, because not only for companies, but if IBM gets somebody #1 in his class at the Wharton School of Finance, and you're dying to get the person, but you can't guarantee the person stays in the country, because oftentimes they'll say, I'm sorry, sir, you got to get out of here, you have 24 hours, right? And you say, where's my employee? Now IBM can buy a card, and that employee can be there for essentially a very long period of time.
Mr. President, could you tell Bruce?
It's so needed for the companies. It's needed for others, but really it's basically a much better form of a green card. And you can't get green cards. They are impossible to get. This is much better than a green card. Yeah.
Yes, so did you tell Bruce Blakeman not to run for governor, or that she should think about not running for governor?
I haven't spoken to, first of all, he's a friend, she's a friend. These are two great people running. In a way, I hate to see them running against each other. I hope they're not going to be damaging each other. But Elisa's fantastic, and Bruce is, they're two fantastic people. And I always hate it when two very good friends of mine are running. And I hope there's not a lot of damage done. Sometimes it works the other way. The victor ends up being much stronger because of it. A lot of times that happens in politics.
You think you'll step in a couple months to actually see who performs?
Well, I think in New York we have a convention toward the end of February, and I think you'll know pretty much at the end of February what's going to happen. And I'll probably have to, do what I want to do. But I hope that he's running now, as you know, and she's running. We have two very talented people. Either one should win against the Democrats.
Mr. President, the recent legacy story lately focuses on one of your cabinet members predicting that you're going to fire this one or you're going to get rid of that one. Of all your cabinet members, who would you perceive as the most under attack?
Well, I think my cabinet's fantastic. I read these same stories that I'm unhappy with this one or that one, and I'm not. I think the cabinet's done a great job. I read a story that I was unhappy with Pete because he was attacking drug dealers. I said, that's not exactly right. I would say very much the opposite. Pete Hegseth has been phenomenal. I read a story recently, I'm unhappy with Christie. I'm so happy with her. I mean, we have a closed border. We have a border that's the best border in the history of our country. Why would I be unhappy? She's fantastic, actually. We have a fantastic cabinet, really fantastic cabinet. I mean, Lutnick I'll have to think about. No,
can't have everything.
Can't have everything. He's doing great. Well, Howard's done really well, and Scott's done really well. We have just a fantastic cabinet. I'll tell you who's doing a great job is Linda McMahon. We're bringing education back to the states where it belongs. Education is going, we can't do any worse than we're doing right now. Let the states run it. If you go back to some of our states that have run so well, so good, I would say 40 of them. And then you'll have trouble with 5, and you'll have bigger trouble with another 5. But you have 35 or 40 states that will run education as good as Norway or Denmark, Sweden. We have some, the heads of the list are Denmark, Norway, Sweden, a few others. I think if you go to Iowa and you go to Indiana and you go to, I can name a lot of states, I think it would be almost the equivalent or maybe better. But you can't run a school system in Iowa from Washington, D.C. Yeah.
Sir, the Gaza plan, when do you expect to announce members of the Board of Peace, the leadership of that?
Well, we'll do it early next year. And the Board of Peace are going to, it'll be one of the most legendary boards ever. Everybody wants to be on it. It's mostly going to be, I guess, we weren't thinking about it that way, but they want to all do it. Basically, it'll be the heads of the most important countries.
Mr. President.
They all want to be on. It wasn't really planned. We thought we were going to get very distinguished people that do that kind of thing for a living. But really, it looks like it's turning out to be, they want to be on. The heads, the kings and the presidents, prime ministers, they all want to be on the Board of Peace.
Mr. President, on the follow-up to last night's rally, can you clarify, you have called the affordability crisis as a Democratic hoax, but you also want to make America affordable again?
No, the word that they use is a hoax, and because they're the ones that caused the problem. I'm talking about when you're trying to say it a different way. Now, it's pretty simple, though, if you listen. It's a hoax where they created the problem. They're the ones that gave the high prices. So when they use the word affordability, they shouldn't be using that word because they're the ones that created this problem. They created the highest inflation in history, and they created the highest prices in history. And now we have to get those things down. But when they look and they say affordability. They never discuss it. They just say the election's about affordability. Well, it may very well be. I think it's also about still the border. You have to remember the job. The sad thing is, for 7 months, we've had no people come through our border. Nobody can even believe it. 0 people. And the people that do that are largely Democrats, which the people that do the stats. We've had no people come in, other than coming in legally. But if you take a look, and nobody wants to talk about that. In fact, last night I said, let me talk about the border. My own people told me, sir, nobody cares about the border anymore. You've fixed the problem. I said, do I get a little credit for fixing a disaster where millions of people a month would flow into our country, and from prisons and from gangs and from drug dealers and mental institutions? They say, sir, you fixed the border. Nobody cares. I say, but I care. It's sad when you fix something and then you can't even use it. You can't talk about it. My own people don't want to talk about it anymore. But very simply, the Democrats created the worst crisis of inflation that this country has ever had. And with that came the highest prices that we've ever had. And I'm fixing it.
Mr. President, has Secretary Hegseth told you why he hasn't released the video of the second strike?
No, he hasn't told me. I thought that issue was dead. You're surprised you bring it up. You must be CNN.
Lawmakers are still
Are you
talking
CNN?
about it on the Hill.
Are you CNN?
I am with CNN.
Oh, gee, I'm shocked to find out.
But lawmakers are still talking about it on the Hill.
Well, I'll tell you, I don't know about lawmakers. Which lawmakers? You're talking about
Most of the
Democrats?
Democrats have been talking about trying to release it.
I mean, the people that you work for, the Democrats? You know you work for the Democrats, don't you? You're basically an arm of the Democrat Party. Thank you very much, everybody. I appreciate it. Thank you. Thank you very much.
Thank you guys.
Come on, you want to talk?
Thank you guys.
All right, well, there you go. We got to hear President Trump answer some questions there. So look, here's what I want to do. We didn't come on the air to cover the Trump appearance or the Venezuela oil tanker thing. We came on the air to cover the Fed interest rates decision, okay? And so we did some bonus coverage from you, a bunch of bonus coverage of this. But I need to take a break and eat something, to be quite honest. And we very well might later today. I may want to do a stream on the oil tanker, but I don't want to do it right this second because I need to just take a little break and eat something. So I think what I'm going to do is wrap up this stream, and we very well might do a stream in a little bit where we cover the oil tanker news, okay? But I got to do that right now. We ended up going, which is, I'm glad we got to cover that, but we ended up going longer than I thought because we were covering the oil tanker and then President Trump answering questions. So let me do that. And we very well might have a stream on the oil tanker stuff. By the way, Politico is saying the oil tanker was headed to Cuba. That's what Politico is saying. But so let me do that, all right? And maybe we'll be on a little later to talk about that. Okay, so I appreciate your allowing me to do that. And I really appreciate everybody being here for the stream. If you missed it, we did full cover of the interest rates decision. We showed Jerome Powell's press conference, if you missed that, and we talked all about that. More to come. But again, let me go take a break and do that, but feel free to rewind and check that out. So I really appreciate you guys being here. Also, thanks for letting me read your comments on the air and sending in your comments and updates and posting in the chat. And I would suggest turn on notifications for the channel if you want to know if we're coming on again today. We have a notification system. You sign up for free and you get a notification whenever we go live. We do it through Discord. It works great. I would recommend you sign up for that. The mods will post the link to sign up for the free notifications. You can find that link also on Facebook and YouTube. In the description of this broadcast, you'll see the link to sign up for the notifications. But I would highly recommend signing up for those. Also, if you're on X, you can follow us at Agenda Free TV on X. I always post there when we're going live too, so follow over there. I'll put the link to that in the chat. And I will post while I'm off the air. If I see updates to the news, I'll post on my X account, which is at Lookner. You can follow me there if you want on X at Lookner. So again, while I'm off the air, if I see stuff going on, I'll post about it there. But we very well might do another stream today. I just need to take a break and eat something, to be quite honest. So let me go do that, and let me see how things are looking, and maybe we'll do a stream about the tanker. I really appreciate you tuning in, and huge thanks to our moderators as well. They are the reason that we can have our chat rooms. We couldn't have it without our moderators. So huge thanks to our moderators who've been here. I owe a couple people thanks for donations too. I'll thank you in a second. Beth Mythical, Ruth was moderating, Leslie Ladyhawk over there on YouTube, and all of our other YouTube moderators. Huge thanks so much. Also, De Bears, I Got That Fire, Mark HNC, Matthew Kohai 3 on Twitch. Huge thanks for moderating, and all of our other Twitch moderators and our Facebook moderators like Margaret Riley and Paul Anderson and Kay Lowry Body. Thank you. And Shannon Davis Hughes. Thank you. And Linda Belk, Larry, and Misha on X. Huge thanks for moderating as well. And I owe some thanks. Thanks to everybody who donated today. That is so nice of you guys. That is what allows the channel to exist. Big thanks. Janet B., thanks for the memberships, Janet, one of our moderators. Thank you, Janet. Mitchell Pilot, thank you so much. Mitchell Pilot says, everyone knows I'm quite supportive of Trump, but Mitchell Pilot says he thinks public messaging on Ukraine sucks and is nonsense. He says it is beyond me as to why this administration refuses to apply more pressure to Russia. That's what Mitchell Pilot says. He is a Trump fan, by the way. Thank you also, Sevenfold, for your support, and Adrienne Hall, and Flumpingtons on Twitch. Thanks for your support. Diet Ginger Dale, thanks for subscribing on Twitch. Toolman Tim, thanks for the gift sub on Twitch. I really appreciate that. Okay, also, we do have a chat where you can chat with other viewers when we're not live on Discord. It's free. It's the same link as the free notifications link. So check out our Discord chat. And thanks so much to our Discord mods as well. Really appreciate all you do, Discord mods. Thanks, Cece, for the bits on Twitch. Again, I'm going to take a little break right now. I got to eat something. We might do a stream on the oil tanker news. We've been talking about it during this stream. We might do its own stream a little later, but let me just take a quick break and eat something first. What else was I going to say? If you're on YouTube, if you're watching there, I would suggest turn on the notifications on YouTube. That's another great way to find out when we're live. To turn on the YouTube notifications, what you need to do is you need to subscribe to the channel, and then you have to click on the notifications bell and choose all notifications. If you are subscribed, make sure you have the bell checked and you've chosen all notifications to get the notifications. All right. Also, big thanks to our hold on a second, our Facebook subscribers for subscribing to the channel, like Robert Rial II and Diane Allworth and Sharon Klassen-Goslin and Christy Claft and Kay Lowry Body and Margaret Riley and Shannon Davis Hughes and Chuck Mosca and all of our other Facebook subscribers, Krista McConnell Gates, and all of our other Facebook subscribers. Thanks so much for supporting the channel over there. And also on Twitch, thanks to our subscribers there like Matthew Kohai 3 and DeBears and Wall Street and Shaggy and Flumpingtons. Let's see. Cece, thank you for being a subscriber. Chi-Town Bear, thank you. Did I say Wall Street and Shaggy? I think I did. A million, thanks for subscribing. Pretty Boy Floyd, Baldinger, I think it is. Bald Ginger, I'm sorry. Thank you for subscribing over there. Douthis, thanks for subscribing. And all of our other Twitch subscribers, huge thanks. And our YouTube members, thank you for being members over there. People like Kenneth Colton, Delito-Matic, Patricia Grace, CAC-A13, Betsy's Tag, Larry Martinez, Marcus G, Michael Avery, Ellen G, Chaz Martin, Fred Flintstone, Gary Baines, all of our other members over there, thank you so much. And Kenneth Colton, everybody else for watching. Aldo watching from the Netherlands, thank you. Sean Green, Kenair Rose, JC, KQ, D. George, thanks for watching. Missy Fuss on Twitch, Pendergasted, all of our other views over there. Let's see here. Oh, thanks to Toolman Tim for subscribing. And thanks for watching, Paula Thompson. And a couple more here. Stasia Morgan, thanks for watching on Facebook. Forrest Ritchie, thanks for watching. Melissa Terry and Kelly Reed Litchfield, was it? Did I get that right? All right. So again, I'm going to take a break. I'm going to eat something. I need to eat something, and maybe we'll do a stream on the oil tanker stuff. I will keep an eye on that. Maybe we'll get more from the U.S. government on that too. Trump seemed to suggest that we're going to hear more from the U.S. government on the oil tanker. So I will keep an eye on that. So let me eat something, and maybe we'll be back in a little bit with with more news. Also, thanks so much to Derek from Gold Safe Exchange for coming on for the sponsored segment mini interview that we did. Okay, that is it for now. Thank you for watching, and we will see you soon with more live coverage, maybe later today. We'll see you soon with more live coverage right here at Agenda Free TV.